Hey traders, it's Chris. This is a quick coaching session on day trading, and we've introduced a new Telegram channel for people who are paying subscriptions or who have the advanced pro charts within the last 12 months, just to give you a bit of added value. And for those people who want to grow a small account into a much bigger account faster. And so these are ideas which you can use using the Advanced Pro charts, and you should have them if you've got the Advanced Pro charts. So you have all the tools to hand where you can day trade if you wish. Now, I personally don't day trade, but I'm willing to spend a bit more time on the charts for you guys that have been dedicated to me and the Advanced Pro charts, just to give you a bit of added value. So let me go on. The top-down analysis is really important because you've got to understand what's happening in the long-term charts so that you can see where the trend is. This is the pound yen, and we can see that there's an uptrend going on. We have a parabolic trend dictated to by the Advanced Pro charts and tell us where all the buyers are in. All the buyers are in. We have a big fat buy signal here when we have a sell with a big fat sell signal. So we can presume that the price continues with that market structure. That's the first thing. The second thing is what we're looking for is for the price to come into demand. This is a very common factor. Don't miss this. Please don't miss this. It really is simple once you actually get the hang of it, and you won't believe how much money you can make once you get the hang of it and once you've got the Advanced Pro chart. So what we're looking for is confluence. Confluence in the market. So as this trend line is hit by the price and the price hits the demand area, there's going to be a big bounce to the upside, as you can see. So what I want to talk about now is, first of all, position trading. So as a position trader, I would put my position on here at 190.37 or thereabouts, depending on the time of day. And then I would be going long to the position and up to the predetermined target, which has already been given to you by the Advanced Pro charts. So the demand levels are given to you beforehand. So these are leading indicators telling us where the price is going to bounce, where you're going to buy it, and where you're going to have your target already predetermined. So there's very little for you to do. That's the first thing. So if you're holding on to a position trade, don't know how long that is. So this is the 7th of May. It would have got in somewhere around there until the 9th of May. So, you know, very, very short period of time, a couple of days, but nonetheless highly, highly profitable if you held on to that. That to those 283 pips. Thank you very much. Another trade there, as you can, 234 pips. The other thing I'll talk about is price cycle. This is highly, highly important, because if you don't understand price cycle, then you're going to get in at the wrong time, in the wrong direction, etc. So what we're looking for is the price to come into demand with convergence, and then we're looking for price cycle to be very, very cheap. And this is dictated to by the Advanced Pro charts. Now, once you have the Advanced Pro charts, it doesn't get any simpler than this. And once you get them, you're looking for repeat patterns over and over again. And don't be surprised how many times this occurs. So if you want to buy into this market now on supply at an overbought situation, then good luck to you. It may continue up, but you're better off looking for a price to come back down into the demand zone. There'll probably be a demand zone later on. And then the price continues up to a much bigger fit here to 195.50 in the next few weeks. So let's dive into a little bit of the day trading technique, which you can use immediately, starting tomorrow, starting when the markets go live, and then you can start making some money. Why is it an advantage to day trade? Well, let me explain a little bit. Let's move that out of the way. So as we get into this position here, you're going to have a position somewhere around there. You might not get in on the demand area because it's, I don't know, 6 o'clock at night or whatever time it is, and you get in a bit late, and then you're going to have a position which is below the swing high is your stop loss. And then you're going to have a position up to target, which gives you a 2.72 risk to reward, depending how early you get in, depending how late you get in, etc. Now, one of the things here, if you have a 100 pip stop loss here, is that you have to have a 200 pip target minimum, or at least 1.5. 2 times is good. This is 2.29 now if you get in late. If you get in on demand, straight on demand as we recommend, you're talking about 4.7 times risk to reward with a 62 pip stop loss. So that is massive in itself. So just be aware of that. Don't be frightened to get in on demand, because that is a buy area which is crucial. And if you know the buy area, which you will, then get into that in the uptrend before it actually bounces, if you can, if you feel comfortable. Now, because you're talking about a position trade, top-down analysis, you're talking about a much wider stop here as opposed to a day trade. It means that you can put on a bigger lot. So let's look at lot sizes. We look at lot size, money management, and we're looking at the average true range as well, which gives us an important factor in what we do. So let's look at, normally you would say, if it's a small account, it depends on the lot size, but let's say you go with a one lot position, which equals $10 per pip. Okay, and you're going to risk 100 pips, so you're going to risk $1,000, $1,000 to make $2,000 to $3,000. Okay, that's your risk to reward. That's how you play it normally. Now let me just spend a bit of time on the lower time frame to give you a better idea of how you can use that in order to increase your account, the small accounts I'm talking about here, much quicker, because most people don't have $100,000 accounts. Most people have a few $100s, but that's the reality of the markets. So let me put that to one side. So that's a typical position trade, let's say, depending on the size of your account. One lot, $10 per pip. You're going to risk $1,000 if you're 100 pips stop loss, and you're going to hopefully make $2,000 to $3,000, which is your risk to reward. And in this instance, that would have been the case. You would have made $2,000 to $3,000 on that position. And of course, with position trading, there's nothing for you to do. You just put it on and then you just leave it. And then it goes to target and you wait for another setup. So let me go to the 5-minute chart. So this is an idea which I'll put to you, and I'm going to line these up. Let's move that out of the way. The daily is bullish and buying, so we can see, and this is a 5-minute chart, and I'm going to line these two up so that they coincide with each other. So one thing that you can look for in a day trade is the change of character. So this here is your change of character. So this is one of the tools that you have on the Advanced Pro charts. Let's get rid of that now. Okay, so there's a few things here. Now I've lined these up, I can now switch the 5-minute chart to a full chart. So we have change of character here. Everything's gone green, and that's the key. Once everything goes green, you're looking for buys only. We know from top-down analysis the price has pulled down into a deep, deep level where it's likely to bounce up again back into the trend. That's the first thing. The other thing to bear in mind is the fact that we have a 200-day moving average here, which is the black line. Very important, so I'll highlight this. And the other thing we have here is the central pivot. We've spoken about this many, many times before if you've been with me for a few years, but it's fine to talk about it over and over again. The other thing we have here is targets. These are pivot points set on the Advanced Pro charts, which give you the opportunity to buy into the price on the 5-minute chart. As the price comes into this demand area, then that's a buying opportunity. But let's have a look at the price as it bounces off here, moves above the 200-day moving average, moves above the 200-day moving average, And this is the 50 moving average here as well. Now you could buy anywhere along there, it doesn't matter, because your stop is going to be below that area here. So if you get in there, your stop's going to be there, and then you're going to have a target to up there somewhere. Okay, so once you get into the price, then the price just continues up. Because it's a 5-minute chart, of course, it's going to be toing and froing, going one way and the other, and then it sort of takes off and hits your targets. So there's a long position here. There's a long position here. Long position here. So there's plenty of opportunities to get into the market. Long position here. Long position here. Long position here. And so on and so forth. Now, in order to ensure that you're in the right place at the right time, you need to make sure that the price cycle is doing the right thing. So if we come up to here now, as it's come up to your 200 pip target, you can see that the price is coming into supply areas on the left, the yellow zone. And this is an important area where you're definitely not going to be buying this now, because it's an important supply area and the price is highly likely to react or get rejected at this point. So where can we get in? Where can we put our stop? And where can we trade these positions so that you can get into the price with much better positions without being greedy? The important thing is not to be greedy. So this is one idea that you can take on board and you can trade with. But again, please practice, practice, practice. Use a demo account if you are going to go into day trading, and understand that, you know, you are going to be more active as a day trader because you'll be looking closer to the market and spending a bit more time. Doesn't mean to be trading all day. It's not, a day trader doesn't trade all day. No one trades all day. It's just a fallacy. In fact, what you want to be doing as a trader is learning how to trade and then spending time with your family and friends. That's the whole point of it, to give you that luxury. So once we have change of character on the lower time frame from the very low price of the 4-hour chart, we can say, yes, we've got change of character here. Everything is green. So we now have support lines here, don't we? So these are support lines which you can use as a trailing stop, as an example, if you want to. And you might get stopped out there, but it goes up and up and it stays green throughout. And that's really important. So that position there gives you the same profits as the 4-hour chart, 181 pips. It also gives you targets to aim for. So when I send a signal in the new Telegram channel, as an example, I might put a target here, 191.50. If I get in that down the bottom there, I might put a target here, 192.30, and target 3, which is usually the last one. I usually give 3 targets. I will give you the last one here at 192.93, and that gives you every opportunity to have maybe 3 positions, and then one hits target, the second position hits the second target, and the third one hits the third target. Totally up to you. But here's the benefit now. If you are going one lot in the previous position, you can go now 3 lots. Let me explain why. Because this is there. So if I go long here, let's say, my stop now is not 100 or 150 pips, it's now 37 pips. I have a target here of 192.29. I have a target here of 192.93. So I can get 176 pips from one position, if you like, from a risk reward of 4.79 with a 37 pip stop. So instead of 1 lot, you can now trade with 3 lots with a 37 pip stop. So you're still risking $1,000, but your lot size is triple what it was before. So you're making 3 times. You're not just making $2,000 to $3,000, you're making $6,000 to $9,000 on that one trade, depending on how many positions you have and how many, what size account you have, of course, will make a big difference. So the risk to reward here is much higher, 4.79, by using the same tools on the Advanced Pro charts. Now this is going to speed up the process to which your account is going to grow. Even if you've got a $500 account, it's going to speed up that growth within your account exponentially by using higher lot sizes. Again, it needs practice. You need to learn it properly, and you need to keep practicing it until you've actually got it sussed out. Looking for that change of character is the key, and once you've got that change of character, everything's green in this instance, that is the key to your success. Hopefully that makes sense. And for many of you, I know you're not looking to be day traders, and I understand that it's not something that I like. But nonetheless, for some of you with smaller accounts, $500, $300, this is one way to do it. And you can double your account over and over again using this method. If you have any questions, please do not hesitate to contact me.